What's up everyone, my name is Ryan and you are watching Crypto Grinders. Crypto Grinders is an established channel that focuses on the education of teaching the masses about trading and investing in cryptocurrencies and blockchain companies. Now, I think everyone is starting to take note about what this space is all about, whether they're curious, whether they've been sitting out at the sidelines, whether they have been burnt before. I just feel that at some point there are going to be people coming in. But however, there is a new emergence of a very different type of token that could actually take the market by storm, which is the STO tokens. Now, obviously, by storm may be a little bit exaggerated, but I'm going to be covering all of that in this video. And obviously, I'm going to be revealing the cold hard truth on why utility tokens may not be the best thing to be investing in. I wouldn't say that it's not the thing to invest in at the moment in the short run, but in the long run, we may see a very big shift in the market. Now and so you have to stay tuned to the episode to find out why. So let me build up the backstory first for this episode. So as someone who has invested in stocks before, I am clearly aware of how you benefit from stocks. So if you were someone who has purchased stocks before, there's two ways that you can earn. One is by where you can turn a profit on investing in stocks, right? One where as an investor, you can purchase the stock, and from then you can get capital appreciation as the company does well and grows over time, and that is usually either through various types of events. For example, declaring a profit, growth year on year or quarter on quarter. It could also potentially increase in value because of a merger and acquisition. That means, for example, it was purchased above its current valuation by another company. All these things can actually help your stock from that particular company that you own to appreciate in value over time. Now, the second way that you can actually earn from investing in a stock is through dividends. Now, dividends is something that's very important. If you are someone who enjoys passive income, now, great companies, especially when they're very established, right, will take a dividend payout approach. Now, most of the time when a company is still growing, it usually doesn't pay out dividends. But when a company is a little bit more mature, it will tend to use the dividend growth model to retain its customers or retain its shareholders. So this is something very, very important that you must understand as an investor. Now, as an investor in the crypto space, okay, so let's say you are someone who is not familiar with the traditional stock markets, and you are more familiar with buying utility tokens at the moment. So there are also a few ways to earn. One, same thing, by capital appreciation, which is buying with Bitcoin or buying with a stable coin in a particular altcoin or a utility token, and the value could appreciate with various types of events. Okay, however, the events that I stated in the traditional stock market may not necessarily apply and cannot apply at the moment, because at the moment there are no companies that are announcing earnings or profits, right? In fact, the only companies that are announcing profits in this space at the moment are only the exchanges, because the exchanges are the ones that are truly the ones that are at least bringing in revenue from all the commissions and of course whatever trading fees that they earn. Okay, so and of course when you have trading volume means that they also earn commissions from all the volume that is being moved around from one account to another account. That is how usually each exchange earns. Then of course they could also open up other multiple streams. For example, margin trading, that's also another stream of revenue that the exchange can earn as well. Okay, but can we say the same for a open source cryptocurrency company or blockchain company? This is the part that is very, very hard to determine, because at the moment, I think everyone is focused on development, making sure that their network is secure. And the way that people have been earning, of course, in this space, there is something called staking. So if you have an X amount of tokens, you can stake within the network wallet. Okay, and when you stake within that particular crypto, in that particular wallet, you are able to earn some tokens, right? Because you have been so-called supporting the network by virtual mining or actually just staking, as they call it as of now. In the past, mining is still prominent. We're talking about actual buying up actual physical miners. These are basically the ASIC miners or another type of technical miner. I'm not a miner, but miners are also able to earn coins by supporting the network and validating transactions, or it can be another form. It could take on another form. It really depends on how the code is written and what is the purpose of someone who plans to do mining, whether is it virtual mining or actual physically buying the miners and operating them with electricity, so on and so forth. So that's one way of earning your coin. But when you earn those coins, you have to understand that the company is still, the company or the network, right, still has to maintain its value. Because when you are getting more and more coins, okay, you feel good when you know that the coin has growth or has stability, okay? So that way, someone who is dedicating, okay, you already bought the coins or you bought the miner. So no matter what, there has been an investment in some form, okay? So when you already dedicate this amount of funds, you are definitely expecting an ROI. Very few people are actually now in it only to support the network. Because if I'm supporting your network, what's in it for me? Because I'm actually trading either time, money, and resources to help you, okay? So if you want me to help you, what's in it for me? So in exchange, obviously there is the tokens that are being minted and given as a reward to miners who are supporting the network, or you are someone who is virtually staking, hence you are also supporting the network as a node, as they say. So there are obviously security risks, failure of code, a lot of risks that could happen, especially in a very young beta stage of the network. And if there's something that goes wrong with the wallet, your coins could get stuck on the network, it could just go missing. There are a lot of risks involved, right? So think of it this way, at the moment, since there's so much risk, right? For me as an investor, I definitely would want a higher ROI as opposed to the traditional stock markets or whatever investment vehicle that's out there. But however, the reality of it is that right now, how do we determine the value? Like, what is the right way to determine the value of a utility token? We don't have to name names, but let's just ask ourselves this. Why is the price of Bitcoin at this current price, right? Is there a way that we can validate this price, or at least put a few valuations together, or a few matrix together, and kind of formulate something? So let's go back to the traditional stock example. So when a company issues an X amount of stocks, it also has a report, and that report is done either internally and then after that validated by an external accounting and auditing company. Obviously, companies can also internally audit and do accounting, right? But however, when you become a public listed company, and when I say public listed, means that you're definitely on a licensed stock exchange. From there, before you can even IPO or create your initial public offering, okay? Because prior to you becoming public, you are definitely private. So however you gain your value, right? It is either through raising funds by private investors, and private investors can range from VCs, family offices, hedge funds, individual rich high net worth investors. You name it, usually it's all done privately. So that's behind closed doors, and then from then agreements were made, and that's how they raised the initial capital. That also adds to the valuation of a company. Then as the company matures, it creates develops products and has growth, users, and obviously sales of that particular product or solution. That's when you are able to have revenue streams, and after that you have profit. That also builds and piles up and helps to add onto the valuation of the company. Now, right now in the crypto space, can we clearly say that I am pretty certain that there are companies out there that are already marketing their particular software solution or their actual physical product. But however, not many of us understand the value of our utility tokens. So when we buy all these utility tokens, right, we are just happy to see the value go kind of up and down on the exchanges, but we don't even know the long-term implications. So I'm gonna now have to put the hammer down a little bit early, and I hope that we have some time to run before people start realizing this. And I sincerely believe that we have quite a number of years to kind of enjoy this gravy train, okay? And I hope that it doesn't happen too soon. So here's my concern, okay? I am not someone who is able to predict the future. But because of my previous experience as a banker, definitely I have seen certain things and experienced certain things through my professional career that I can make these assumptions, okay? So right now, if you are a utility token holder of a particular blockchain company, for example, you're just a utility token holder, the current value is derived through speculation and purely on how the market perceives it to be. Honestly, that is just it for the time being, okay? Now, just imagine this. Your company, your particular blockchain utility token, that suddenly there's a bigger company that actually takes interest on your blockchain company, okay? And the reality of it is that we, or utility token holders, okay, are not going to be rewarded for holding on to these utility tokens. Okay, why is that so? The reason is very simple. These are not meant to be securities. Okay, every blockchain company, when it's first started out, it has to be registered somewhere in the world. And when it's registered somewhere in the world, there's always a number of investors that start this company, and definitely there are shares that are going to be basically allocated to the various directors or managing partners in the company. Okay, and once that happens, if a company is truly a larger company, okay, is interested in buying up that particular blockchain company to kind of incorporate their solution, or just noticing that, hey, it's truly worth integrating into my company, I'm only going to be able to pay out and value the ecosystem based on the growth and how much talent and revenue can be generated from this particular company. And that does not involve the token holders. Okay, I must make this very, very clear. It does not involve token holders. And the only way that you are going to be rewarded as a utility token holder is truly by the founder himself. Okay, it's really just based on goodwill. There is no written agreement. Think of it this way. When you first participated in an ICO, was there an agreement that was signed between you and the company? Did you ever even have to sign off on any documentations on the terms and conditions when you bought the utility tokens? Yes, there are disclaimers, and it's clearly stated that most are not securities. So the point now that I'm trying to make is that right now you may seem to be getting tokens, okay? And thankfully, these tokens do have some kind of value, either a few cents to a few dollars, okay? But when there's going to be an acquisition of your favorite blockchain company, please take note that you are not going to be awarded, or you're not going to enjoy an increase in valuation, even though there is a valuation on your particular blockchain company. So be very, very careful. And that is why when you invest in this space, I'm not saying that you should not be loyal to what you believe in, but just take note that this is just the truth for now. Okay? And like I said, if I am the founder and I just got my company bought out for a few hundred million or $1 billion, that's all mine and to be shared amongst my partners and maybe my employees. But other than that, the token value, right, will not necessarily shoot up. Okay? It will not necessarily shoot up because it doesn't have to. It is not a direct correlation. So the next thing that I want to highlight is the STO market. Now, the STO market, eventually, whatever form it takes, will have these benefits linked together, because the STO market is definitely going to be regulated. Every single token that is going to be listed on a licensed exchange is considered a security already. So by definition, at least we all know, okay, cool. The moment I own a security token, I have some form, or I'm allowed to get a payout of dividend, right? Whether is it in the company's revenue, and the company can clearly state that, and at the same time, whatever capital appreciation or any future growth, right, can all be stated out clearly. Now, can a company actually not link its profits to the token and give something else? Sure, it really all depends on the company, because the STO market doesn't have to follow the traditional stock market. It could be a private company that just wants to have an arrangement that involves a level of securities. For example, if I'm a private company right now, let's say Crypto Grinders, okay, it's a private company at the moment. We are not a public listed company, but we want to look at providing dividends to our private investors. Right now, if I was to choose an STO platform and I create my own tokens, and people who are supporting me in providing me private financing, okay, or corporate financing as they say, as opposed to me approaching a bank, instead of giving and paying interest to a bank, I rather pay investors, okay? So if I want to pay my investors a portion of either my revenue or my profits, or even let them grow together with my company as my company's valuation increases, I can now do that openly, and it's not illegal for me to do so, because everything will be in black and white and the agreement will be stipulated in such a manner. So I sincerely hope that this episode has really shed some light and showing you the difference when you are coming in as an investor and buying a utility token as opposed to you buying a security token. So obviously there has been this question: am I able to buy security tokens at this point of time? Unfortunately, a lot of the security tokens are only available for accredited investors only. The only way that you can buy a security token is only when it actually is listed. Okay, so that means you are going to allow yourself. For example, I was never someone who bought Apple when it was in its IPO stage. Definitely not. But can I buy the Apple stocks now and potentially earn whatever I can from its capital appreciation? Yes, I can. If I was to buy a bank stock, and for example, if I was to buy Goldman Sachs, right, or even JP Morgan, and if those are, or Bank of America, and those were dividend paying stocks, I could actually still earn a dividend from those stocks. And if the STO market actually follows through and does kind of the same thing, there should be no reason why it doesn't, right? You will be able to benefit from building up a dividend portfolio within the STO space as well. But take note, the ICO market, will it still be around? Yes, it will, because I still believe that now we have a different stage for fundraising. And there are some companies that are able to do an STO, and there are some companies that should do an ICO. And it's all about defining the boundaries. Each country will define its boundaries of whether they choose to allow ICO or not, and then there will be countries that will allow only STOs, and then there are countries that still are a little bit more traditional and only allow IPOs. So I hope that this episode has clarified quite a few things and shed some light on quite a few things. So if you are someone who is new to the channel, I hope that you give this video a subscribe and of course a like if you felt that the content was relevant to you, and don't forget to share and comment below if you're someone who would prefer ICOs or STOs. Alright, thank you so much for watching guys, and we'll see you in the next live stream.